From AAAFx, it's Chris, and I'm taking a look at the Dow Jones 30. You want to talk about a market that's overbought? It's the stock market in New York. However, not all indices are the same, and I'll show you what I mean here. This is the Dow Jones 30, and you can see that we fell pretty significantly, only to turn around and form a massive hammer. We'll have to wait and see if that ends up being a hanging man. But take a look at the candlestick for the NASDAQ 100. So why is that? Well, the NASDAQ 100, very tech heavy, very heavy in seven stocks. So that has a bit of negativity if the wrong stocks start losing money. S&P 500, a little better, but not a lot than the Dow Jones or than the NASDAQ 100. Why? Because it has a lot of those same Amazon, Microsoft, Tesla type stocks that move so much of the index. Remember, it's not an equal weighted index. It's, you could say the NASDAQ 100 is like the NASDAQ 7, the S&P 500 7. The Dow Jones 30 is a little more equally distributed, and that might be why we saw a little bit better performance. So looking at the Dow Jones, pretty choppy. Typically what this means is that when you see a lot of chop back and forth like that, you do typically see a little bit of a pullback. And if the NASDAQ 100 and the S&P 500 really drop during the session on Wednesday, it could pull the Dow Jones 30 with it. But ultimately, I do suspect that it ends up being an outperformer. So let's take a look. And I'm zoomed way out here on the hourly chart, but I want to look at a couple of possible value areas. I see a big value area right here. It's probably not quite 37,000, might be a little bit above there. So let's call it 37,050 for now. I'll just put a line there. And that's an area that I'll be watching as a potential buying opportunity. I also would watch this right here. So 36,500. And here I would definitely be interested somewhere right here around, I'm just going to call it 36,000. It's kind of a messy zone. So, when you see this, you see there are definitely areas where we may be buyers based on value. So let's take a look at the MACD. Zoomed way out, and you can see prices are rising, the histogram's dropping. So we are starting to get a little bit of divergence. We might be getting a bit tired. That really shouldn't be a huge surprise. I mean, look at what we've seen on the daily chart. That's out of control bullishness. That being said, markets remain out of control much longer than you think most of the time. So you can only read so much into an overbought condition, but it does mean sooner or later you're probably going to pull some profits out of the market. So with that being said, pay close attention to the ISM numbers in the United States on Wednesday, and definitely the jobs number on Friday. Ironically, the better those numbers are, it might actually be negative for stocks in America because it means that the Fed may not be loosening monetary policy. This was all about the perception that was going to be the case. So be vigilant, be careful, be nimble with your position sizing, and look for value. Chasing all the way up here is a bit rich. Doesn't mean we can't go higher. I mean, clearly, people are willing to jump in and buy without any thought, but we're up 17% from the end of October. It's a bit much.